where we keep evaluating our portfolios, looking at valuations, looking at incremental earnings growth trajectory, etc. So when you look at the markets, clearly the markets have been impacted by both external and internal factors, and within the internal space, last 2 quarters of earnings have been muted, and that's possibly also weighing on the market. So the way we are looking at our portfolio is threefold. We are looking at quality over momentum. We are looking at companies where valuations are reasonable and attractive as compared to pockets where valuations are excessive. And we are also looking at companies where liquidity and free float is high. So these are the 3 key areas that we are looking at. Having said that, when you look at the headline market and the correction that we have seen, if you look at a stock level, the correction on a broader basis has possibly been even higher than what the headline suggests. So in that sort of a market, we are looking at bottom-up opportunities. From a sector perspective, we have taken up some profits in segments such as industrials, capital goods, and even automobiles over the last maybe quarter or so. And incrementally, if you look at our positioning in sectors, we have an overweight stance on technology. We also believe that the larger banks, specifically the larger private banks, are well placed in terms of valuations, and risk reward seems to be favorable. And therefore, these are some of the segments that we are evaluating. Even in the auto space, we will possibly look at more the rural as compared to urban, and therefore two-wheelers over passenger vehicles. And therefore, these are some of the sectoral calls that we have taken in the last quarter or so.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.